So this week, we're going to be talking about AI and what's been happening in the AI sector and segment of the market. So everybody needs to stay calm. It's the Nvidia Bros time, 15 minutes of fame, so let them have it. Now, what I want to do, or what I want you to do during this video, because it's going to be a pretty heavy graphic, as in pictures, it's going to be infographic presentation. And what I want you to do is ask yourself, how does this information make me feel, and what am I supposed to do with it? How am I supposed to act in the world with this information on each and every one of these charts? Because, people like to do a little confirmation bias, both for or against something, and select one or two things and use that as validation to support their argument as though it's the end-all be-all. And then what I'm asking you to do is, given any one of these charts, how does it instruct you to act in the world? Because isn't that what information is for? Is to give you an idea of how to conduct yourself. Should you buy? Should you sell? Should you avoid? Should you hold? Those are pretty much your four options when it comes to participating in the stock market. So here we have tech giants. We're all about AI this earnings season. Mentions of AI in selected tech companies' earning calls in April and May of 2022 versus 2023. Alphabet had 7 in Q1 of 2022 and 65 mentions of AI in 2023. Meta had 21 mentions in 22, 56 mentions in 23. Microsoft had 8 mentions in 22, 53 mentions in 23. Now it's interesting how this chart works, because outside of the fact of people trying to give you a gist and a general understanding and impression, trying to be that gentle guiding hand that nudges you, whether that be nudges you into commiserating with them, validating their framework, or getting you to also buy something, you have to remember how pictures are formed. Because, for instance, yes, Meta mentioned AI more times than Microsoft, but Microsoft mentioned AI hundreds of times more than they mentioned it last year than Meta did. Meta did, 150% more, and then Microsoft did it hundreds of percent more. And then you could say, well, Amazon and Apple mentioned it 12 and 4 times respectively, and last year mentioned it 0 times, so that's an infinite amount more. So that's interesting. This is a picture of a chart that doesn't end well. Now that doesn't mean today's the top. It doesn't mean yesterday was the top. What I'm saying is anybody who's buying in now, there is I've never seen a chart like this that ends well. Let me just put it like that. And by a chart like this, what I mean is a multi-year chart in which a stock blows past its old all-time high and literally goes vertical. I've not seen, and I'd actually be interested if someone could put in the comments or something, a chart that has ended well like this. It's just going to be a lot of pain and frustration and emotion, and it's not going to end well. Let's just say that. Now you could say, well, in 10 years it could be $1,000 a stock. So it did end well, and fair enough. But if you want to be pedantic like that, then I'm not going to try to articulate to the most clearest extent with all the variables and caveats and nuances and facets involved to someone who wants to be a literalist. So Nvidia hit $1 trillion. So we are living history. This is only a few companies have done this. And I did not put that in the slide deck, but Amazon, Microsoft, Apple, Google, Facebook, I think Tesla, and now Nvidia. I believe Nvidia is the 7th, if I got that right. So pretty impressive. Here's an individual that if you don't follow her on Twitter, you should probably follow her on Twitter. And an individual that I respect very much. That's all I will say about that. And they mentioned that, so is Nvidia in a bubble similar to .com? Not yet, but now is the moment of truth. It's levitating at 3 sigma over 200 moving average, which is 100% above the 200-day moving average, but it did hit 350% above the 200-day moving average during the infamous .com bubble. Excluding that period, 60-day forward returns have always been, so it's not always, because excluding that period, so it's not like there's been a lot of periods, so to exclude a data point in a sample size of 5 isn't to say always, but it's always insofar as you constrain the data set. I'm just trying to be intellectually honest and maintain integrity, and that's why I say it, because now I'm being the literalist. But excluding that period, 60-day forward returns have always been negative when it was 90% above the 200 moving average. Hedge funds and multi-strategies have all been balls deep in this thing for a while now, but contrary to widespread belief, retail is the buyer of last resort of the past few days. Now let's look at this chart on the right. This is what he's talking about when it comes to the returns. And I guess you could say that the expected returns within the time frame that he mentioned should be, unless it's another .com, should be down between 10 to 30% using historical precedents. We have this chart. So that was a scary chart, like, oh no, scary. Okay, this chart. Bubbles can last longer and grow bigger than most could anticipate. For what it's worth, Nvidia isn't even close to as richly valued as it was in 2000. Like, look at what it was in 2000, 1,000 times. Okay, now look at this chart. You're like, wow, it has a lot of room to run before it gets to that. But it's like, well, that's an interesting anchoring bias, don't you think? This really should be more along the lines of chart crimes, which I wasn't intending on doing when I made this video, but I'm doing it now, so, well, it's worth paying attention to, because a chart tells you how to think, and if you don't have the metacognition to think for yourself and to question what it is you're seeing, then you're going to be in trouble at some point in time or another. You could also look at this chart and say, well, you have that 2000 period, and then you have that, let's call it 2004 spike, and then you have a 2011 spike, and then you, I don't know, between 16 and 19, it kind of ramped up and ramped down, and then call 20 a spike, and then we're in another spike. So that's 1, 2, 3, 4, 5, 6, 7 spikes. You could also say that it's the second most richly valued that it's ever been. And that outside of 2 of those, I don't know, 2 of the 6 or 4 of the 6 occurrences, it's almost double the valuation of those. That's another way to say the same thing. But anyway, this picture is a nice basing formation with a long way to run before it blows out its highest earnings from last time. Of course, like, is the environment the same? Like, that was entire market hysteria and bubble and tech and telecommunications were getting broken up in 1998 and telecom was just, I mean, is it the same thing? Then I got this. I really just want to show this chart on the left, but I'll read this anyway. Okay, guys, hear me out on this. LOL. AI bubble. We all know it is a bubble. Wouldn't the most obvious way to get long the AI bubble is by buying stock ticker AI? So obvious that most smart people will say, no, that's too obvious. I'm not doing that. And then he goes to say, I am long some out of the money calls on ticker symbol AI. That's that C3 AI, if you've heard about it. Asterisk, non-investment advice. There's a lot wrong with, it's an interesting statement. It's like, okay, we know it's in a bubble. Okay, and then the presupposition is that you want to get long the bubble. But then that presupposes that you know where in the bubble you are with some range of feeling. And I'm sure these out of the money calls they have is of diminutive substance and size in their portfolio, and they're not going to go hungry. But there will be people who will go hungry because of this Nvidia thing. So here's a chart. It's an interesting chart what they include and exclude. But if you look on the right hand side, you'll see this light green line going up called AI. And interestingly, like it almost looks as big as the Japanese bubble. Like, did the Japanese bubble only go up? I mean, I don't want to say only, but went up 100%? Did the Nikkei only go up 100%? And what are they calling the I presume that's what they're calling the Japanese bubble. Anyway, it's tiny, and look at all these other big mountains. Oh wow, it has so much farther to go. And then you have to ask yourself, what's the basket of AI? And then are we talking about from what point? Because this chart seems to start in 23. Now that's interesting because when we go look at the charts at the end of this, you'll see that certain, unless they mean AI literally as C3 AI. I'm not really sure. No, they don't, because this is Bloomberg. This is unrelated insofar as the ticker symbol. So it's interesting because of where it almost looks like they started the chart just in the past couple of months. So that's interesting because some of these are actually down substantially. Like Palantir is still 50% off of its highs, which means it's not quite the bubble that they're making it to be, which actually could mean that it has a lot longer to run if it's going to look like one of these other bubbles. Yet again, just trying to stay honest with charts. Another piece. Whether AI ends up changing the world or not, the current rally is undeniably a mania. Nvidia, for example, is trading at something like 40 times forward earnings, while there's a borderline depression unfolding across small caps. One sector can't propel the market very long. Like, I'm not sure what the message is. TXMC, another respectable individual, has a lot of good information out there. You should follow him if you're not. But it's like okay, 40 times forward earnings. I don't know what kind of growth justifies that. Small caps, like what do small caps have to do with Nvidia? And what does one sector propelling the market have anything to do with the intrinsic absolute warrant and merit and worth of Nvidia? I'm not really sure. It's more of an overall look how much tech's outperformed relative to other sectors. This can't go on, I presume, is the underlying message. So look at all this red and the green. Like, what do you, the viewer, take from this? Here's a good one. What will have a higher total return over the next 10 years? Nvidia versus S&P, SPY. Almost 40% of people said Nvidia. What will have a higher total? I wish someone would somehow remind me of this in 10 years, because I'm actually kind of curious. Because I'm not actually... There's a part of me that could see the S&P trade range bound for the next decade. I'm being honest. Or half a decade. I mean, a decade's a long time, people. And I could see Nvidia falling 50%, 70, 80% from where it's at right now at some point, only to then, do what it just did in the last couple of months to rebound hard. And I mean, it's a tough bet, but from the price of May 30th, boy, I mean, it's a tough one. I mean, Nvidia isn't paying a dividend. I mean, if you just look at base rates, how much has Nvidia gone up per year over the last decade? I mean, just why not extrapolate linearly? And how much has the S&P gone up over the last decade? And I would say whichever has gone up more, which I actually think is Nvidia, even if you count Nvidia back when it was bottoming in October or whenever it was. So, yeah, I don't know. It's actually quite a thought-provoking thing that you should sit down and really think about it for a few minutes. Then we have some more, I don't know, agitprop or fearmonger. I'm not really sure. You have a list of price-to-earning ratios. Here, Nvidia is at 215, which is trailing 12 months, I believe, not forward. I could be mistaken. And then the price-to-sales ratio of 40 for Nvidia, which is kind of high. And which is to say that sales is revenue, which is that they would have to take all their money and return it to the shareholders, all of it, you know, avoid taxes, avoid paying people, avoid research and development, blah, blah, blah. And it would take 40 years for you to get your money back. Whatever. And then on the right side, oh, here we go. Nvidia joins Apple, Microsoft, Google, and Amazon in the 1 trillion market cap club. 10 years ago, Nvidia had a market cap of just 8 billion. So it went from 8 billion to 1 trillion. So I would say that Nvidia has gone up more than the SPY in the last decade. So there's a chance. There's a chance that Nvidia, of course, here's the interesting chart. Of what I read on the left-hand side, the price of sales, Nvidia being 40, Microsoft being 12, so on and so forth. If you actually then chart it, it's quite interesting sometimes to see information listed out, to then only look at it on a chart. And it's a real game changer. So I do appreciate these things because the price to sales ratios, the revenue chart makes it look a lot worse. So much worse. And here we go. Growth of $100,000 invested in Nvidia over the last 1 year through 20 years, telling you how much money you make. Of course, people like to use big numbers. Like, why 100,000? Why not 10,000? Why not 1,000? Why not $1? Why not $1 million? Why 100,000? Is that, oh, well, you know, I had to put a number in there. It's like, I'm not so sure about that. Like, maybe consciously, but I care just as much about people's unconscious as I do their conscious, perhaps even more so because it seems to dominate most people more than their conscious does. What this is saying that if you invested $1 in year 1, you'd have $238 in year 20. It doesn't sound impressive, but 23.8 million, my God, sounds attainable. So, as I asked at the beginning of this video, how does this information help instruct you to act? That is what information is used for, is it not? Could Nvidia at 1 trillion be an ELF, beauty brands, $5 billion market cap, Monster Energy, $60 billion market cap, AutoZone, $42 billion market cap, or O'Reilly Auto Parts, $54 billion market cap? And if you don't know what I'm talking about, pull up a chart of these companies. A boring old auto parts store or beauty brand or energy drink. These companies have done phenomenal and up to par with Nvidia over the years. Of course, they're not getting any celebration. And then you have to ask yourself, okay, fine, I'm supposed to linearly extrapolate their growth and share growth for the next 20 years? Because at some point now they're a trillion, so are we thinking in 20 years they're going to be at 238 trillion? I mean, maybe. I don't know. What's the world's GDP? I mean, at some point, you think growth slows, wouldn't you? And what I mean also is the next ELF, because ELFs have $5 billion market cap. They haven't even began to fill the total addressable market and what they theoretically could do. They could grow like nobody believes for the next decade. And I believe they might. And I actually owned it once and sold it. And retrospectively, one could say I shouldn't have done that. And I shouldn't have. And so, and remember, Nvidia is not in a vacuum. It's not in isolation. You're saying, what's my best bang for my money? I actually almost find it a more interesting question of will Nvidia or e.l.f. beauty brands do better in the next decade? I'm kind of curious about that one. An update on the number of AI-related mentions on earning calls and other transcripts of publicly traded companies. It's gone vertical. It's quite incredible. And increased by hundreds of percent. ChatGPT was out and about, and people were cool with it, and then momentum built, and then bam, here we are today, just a few short months later. And they're not the only one, Nvidia. Here's Broadcom, all-time highs, charts vertical. Here's Marvel Technology, still down, I don't know, 30% from its all-time highs. Stock's gone vertical. Gone up 63% in less than 2 months. Super Microcomputer. Look at this bad boy. Beautiful. Look at that. Oh my gosh. That is impressive. That is impressive. Palantir. I brought up two charts here because year to date it's up 128%. But it's actually still down more than 50% from its all-time high. So depending upon, yet again, I show you a chart. Why that time scale? You should always ask that. Why that time scale? So I provided two. One since the IPO and one this year. Because it's rocketed up. You're like, wow, you're doing so great. And then you're like, oh no, I actually bought, I mean, if had you purchased at the IPO, then you'd be actually up. But if you bought any time shortly after that, you would be down. Then we have C3 AI. Same thing. It's up 247% roughly. I mean, I don't know. These charts were created a couple days ago. Up 247% on the year. And you're like, wow, that is impressive. But then you look at the longer term chart and it's down, I don't know, 70% from the all-time high. I don't know, it peaked out at 150, 160. It's at 40. 160 to 40 is a 75% drop. So you look at it year to date, phenomenal. Otherwise, not so phenomenal. And the funny thing is, and this is the last one for this presentation, is the new NASDAQ. Good old, I don't know, delusional, fantasy, hubristic proclamations of, either an amazing grifter or a pathological, ideological, possessed person. By the way, they're not participating in any of this, which is sad for them. They can't get any of this action. Oh boy. And that's that for that. Now, after hours. Portfolio update. I'm going to touch on a few things. May was a crap month. And what's always interesting is that it was just what happens practically every Monday. The market pops at the open, and then throughout the week, it just drifts lower. And then next Monday, you get a pop, and it drifts lower. And that can really wear a person out. And slowly your names start bleeding more and more, and start going from green to in the red, and down they go. And then in the last 2 days, my on Thursday, my portfolio, by the way, I'm currently in 20% cash. My portfolio on Thursday was up 3.75%. And then my portfolio today, Friday, was up 2.5%, 2.75%. And if you look at all my names, this might be the first time everything is in the green. And at the beginning of the week, a third of this was in the red. Uranium was down. So by the way, additions. I had 1 share of the Sprout Uranium Miner ETF. Added a share of that. And I added, well, this is play it by ear, but I shorted the semiconductors, and I expressed that through SOXS, which is the Direxion 3 times inverse leveraged semiconductor short vehicle. And that's the inverse part, and it's 3 times leveraged. And I was at one point up 9 or 10% on it. I'm currently up 3%. I might pitch that name at any point, up or down. And it's a small portion, like 3.5%, 4% of my portfolio. But now everything's in the green, and it feels nice. And it's been radical market movement. The uranium is just done phenomenal in a 2-day stretch. And this is the whole nothing happens, and then a lot happens. Who knows how this month's going to play out? I have no idea. I see a lot of these charts floating around talking about how the IWM, that's the Russell 2000, versus the NASDAQ, is very wonky, and that more divergence than any other time except the dot-com bubble, or statements like this. But that does not mean that the NASDAQ has to stop going up. The NASDAQ could slow down in its rate of change of going up while the IWM catches up. And everything I own is, well, small cap, medium cap companies. Even my bank stocks, they're the regional bank ETFs. I mean, IAT holds some bigger players, fine, whatever. So technically not everything, and you get what I mean. So if small caps play any kind of a catch-up, then who knows what these names might do in the coming month. And it's just worth remembering that these days can happen. It's nice. It's fun. You know, I was down, uranium was down in the red, Valeris was down in the red, Transocean was down in the red, IAT was working its way in there, and I think that was it. Everything else was in the green. And I mean, Tidewater was at $40 a couple of weeks ago, and each time I hit 40, it's going to be one of those things I regret I didn't buy at 40, because it's done it twice on me and I didn't add any more to my position, and I suspect I might regret that. And I'm not just saying that. I thought that while it was at $40, and I still wouldn't pull the trigger, and I'm like, and so we'll see what happens with that. And yeah, I mean, there's been some phenomenal moves in the last 2 days, starting off June, and we'll see how it continues. So with that out of the way, thank you for watching, and until next time.